Have you ever wondered what's really going on inside a company you use every single day? Like PayPal? Well, that's exactly what we're going to do today. We're going on a little financial investigation, and we are going to pull back the curtain on their quarterly report to find the real story behind the numbers. Think about it. You probably use it to buy stuff online, maybe send some money to a friend. Seems super simple, right? But behind that easy-to-use app is a huge global business. And trying to figure out if it's actually healthy, well, that can feel kind of impossible. But what if I told you it's not? See, the real story isn't locked away in some secret corporate vault. Nope, it's right there, out in the open, in a report that any public company has to file with the US government. And don't let a boring name like Form 10Q throw you off. Just think of it as a treasure map leading straight to a company's financial soul. So, let's get started. So, what exactly is this thing? Well, you can think of it as our official financial detective kit. Let's crack it open and see what's inside. Basically, it's a rule. Every 3 months, public companies have to show their homework. They have to lay out exactly how they made money, what they own, what they owe, and crucially, where their cash is actually going. This is going to be our main source for everything we're about to dig into. Inside this 10Q, we're on the hunt for 3 big clues. First, the income statement. That's all about profit. Then, the balance sheet, which gives us a snapshot of the company's stability. And finally, the cash flow statement. And that one, well, that's where things can get really interesting because it tracks where the actual dollars and cents are moving. So, first things first, let's follow the money. Okay, so our first stop is the income statement. And this answers the most basic, most obvious question of all. Is this company actually making any money?
And the answer is yes, a big, resounding yes. For this quarter, PayPal's net income, that's the profit after all the bills are paid, was nearly $1.25 billion. Now, that's a huge number, but a number that big is kind of meaningless without context. I mean, is that good?
And that's where comparing it to last year comes in handy. When you put this quarter's profit right next to the same quarter last year, you see a pretty nice jump, from about $1 billion up to $1.25 billion. So not only is PayPal profitable, its profitability is actually growing. That's a very strong signal.
So how do they get to that number? This little table breaks it all down. PayPal brought in over $8.4 billion revenue. They spent about $6.9 billion to run the business. And after you account for other stuff like taxes, you're left with that final profit of $1.25 billion. It's a simple story, really. Money in minus money out equals profit. So clue number 1, looking pretty solid. All right, so we know they're making a profit. That's great. But, and this is a big but, that's only one piece of the puzzle. A company can be profitable but still be in trouble if it owes way too much money. To check the company's foundation, we need our second clue, the balance sheet. First up on the balance sheet, assets. This is all the stuff the company owns. As of September 30th, 2025, PayPal had total assets worth almost $80 billion. We're talking everything from cash in the bank to buildings and long-term investments. And then you've got the other side of the equation, liabilities. This is everything they owe to other people. For PayPal, that number was almost $60 billion. This includes stuff like customer balances and any debt the company has taken on. And here is where it all comes together. You take what the company owns, its assets, and you subtract what it owes, its liabilities. What's left over is the total equity. You can think of it as the company's net worth. For PayPal, that's over $20 billion, a very solid foundation. So far, so good. Okay, let's tie this all together with our third and final clue. We know PayPal is profitable, and we know it has a healthy net worth. But here's a little secret. Profit on paper and actual cash in your hand can be 2 very different things. To get the real scoop on a company's lifeblood, which is cash, we need the cash flow statement. This is such a critical question for any financial detective. A company that's making a profit but is constantly bleeding cash, well, it won't be profitable for long. We just saw that their net income was up, so you'd naturally expect that the actual cash they're pulling in from their main business would be up too, right? Well, here's a plot twist. According to the cash flow statement, the cash PayPal generated from its core business activities actually went down by about $1 billion compared to last year. So wait a second. Profit is up, but cash from operations is down? How is that even possible? And this is exactly why we as detectives look at all 3 statements.
Cash flow is tricky. It's not just about sales. For a company like PayPal, a huge piece of it is their lending business. Think about it. They spend a ton of cash originating loans, then they get a ton of cash back when they sell those loans. The timing of all that can create these big swings that don't perfectly line up with profit. It's a perfect example of why you can't just stop at the headline number.
So we've gone through the big three statements, but the detective work isn't over yet. See, these reports are more than just tables of numbers. They also have notes, lots and lots of notes. And this is where you often find the really juicy stuff. Tucked away in every 10Q is a section detailing potential risks, sort of like the dangers ahead section on our treasure map. This is where you look for clues about the challenges a company might be facing down the road. And wouldn't you know it, buried deep in Note 13 of PayPal's report, we find this. It says the Federal Trade Commission is investigating some of their practices. Basically, the government is looking into whether PayPal systems might have helped some bad actors on their platform. Now, we don't know what will happen, and the report says they can't estimate a potential loss. But wow, that's a pretty big risk, isn't it? A huge piece of the story you would totally miss if you only looked at that big, shiny profit number. Okay, so let's step back for a second. We've followed the clues, we've uncovered a plot twist, we've even found a hidden risk. What does this all mean? More importantly, what can you do with all this? What it means is that you now have the toolkit, a simple 3-step process to investigate any public company. First, check the income statement for profit. Second, look at the balance sheet to check its foundation. And third, dig into the nuances with the cash flow statement and those all-important notes to find the real story behind the numbers. You don't have to rely on headlines or what somebody on TV says anymore. The real story is right there, hiding in plain sight, just waiting for a detective like you to uncover it. So the only question left is, which company are you going to investigate next?